Matic, aka Polygon, has just given a strong sell signal. So it's now the right time to be locking in some profits before we're likely to get some type of pullback. We're going to look at it from three angles: the momentum position, the pattern position, but also the price position. Very, very powerful information that we can see what's likely to happen in advance. So if you like today's video, like, subscribe, hit the bell notification, and let's dive straight into Matic. We're going to go into a lot of detail today with Matic, which is a layer 2 solution on Ethereum. Very, very strong project. But we've got this sell signal, and I want to touch upon this. It's a strong sell signal where we should consider selling. But momentum signals by themselves are useful, but we want to coincide them with pattern and price so we get a nice confluence of events, because we did get these other sell signals that weren't as prevalent as this one over here. Now, this sell signal is based on momentum, and I call it a double time frame momentum sell signal. And we've created it in the dashboard as well down here. And it just tells us that the weekly momentum is overbought. Now, overbought just means that the upside should be limited, and that the daily has made a bear downtrend on the momentum, which is basically this crossover over here on the indicator. And that's what gives this sell signal. So now is the time we want to be considering looking for either a short position, or if you're long on Matic already, just to be looking to lock in some profits. So I'm going to go into a decent amount of detail today. And by the way, if you want to check out these sell signals where you can also set an alert, so you can literally set an alert and you'll get an email notification with whatever note you want to put in, whatever your note is, so you never miss a signal again. And it's really an indication to look at the market and see, right, is there some extra information on pattern and price that has a confluence of events? That's called the trend identifier. Massive value. You can now try it out for £1, is in the link below. So what I'm going to do here is we're going to zoom out. I want to look at the pattern position on Matic, really taking this part of the market into consideration. So we'll switch off the buy and sell signals. But before we go into the pattern over here, I just wanted to quickly go into the weekly chart and just remind us about how powerful momentum can be when it coincides with the price action. What do I mean by that? Well, if we look down here where the blue line crosses below the red on a weekly chart, it coincides quite nicely with this top over here. So it gives us a valuable insight that we're likely to see the market move sideways to down, and that's exactly what happened. Over here, we had a bearish reversal, and it was sideways to down. Over here, we had a bearish reversal, and it was sideways to down. And right now, like literally right now, as we're looking at the chart, it hasn't made a bearish reversal, but it's been overbought, which basically means above this 75 level. And that just tells us we're at or near a weekly top. So it's like a clue that we're due for some type of top, going by the pattern that has been occurring in the near past, in the last few months, so to speak. So this is key when we're looking at the pattern, because when we're looking at the pattern, if the momentum is saying something different, then it gives us less confidence. Whereas if the momentum is saying we're likely to see a top, and then the pattern is also saying we're likely to see a top, and then the price ratios is also saying we're likely to see a top, then we have a confluence of events, and then we can take that with a bit more confidence. So I'm just going to actually show you the pattern position that I have. I've just been working on this morning. If I can see if I can get this up. There we go. Right, now with this, now there's a couple of wave counts with Matic and Polygon, but the main thing I wanted to bring to your attention was this is the November peak of the market. We look like we've got this big, some type of A, B, C correction, which seems to have broken down to a nice 5-wave structure over here, right? So it's a big correction. Now, we don't know if this is going to end up being the bottom or if we're going to get one more low. But what we do know, we can look at this market and it looks relatively clear that we've had a nice 5-wave move to the upside. We've had a 3-wave correction, which is pretty typical of a correction of a 2 or a B. And now we're in the process of another 5-wave sequence to the upside. And we want to look at this zone over here. But again, I'm taking this momentum position really seriously that says we're due for a top. And then the pattern position is saying something similar as well. So now let's just go back into the daily chart. Now, before I do, I want to also let you know I've created a new free membership area for a Bitcoin report. We do timely information with Bitcoin because that also gives us a good feel for the market. And if you watch my previous content, you would have seen that Bitcoin is due also for a big correction. Now, whether it's going to come or not, we don't know, but we do know we recently had a big bar to the downside. We've had another retest. And if we do get a follow through with Bitcoin moving towards the $20,000 mark, coins like Matic will also be impacted, Ethereum, and so on and so forth. So do check out the free Bitcoin membership area. I update this at least once a week. We did the last one, I think, on the 16th or the 17th. And there were some valuable insights that you'll see when we're looking at the market from a technical perspective. Now, also keep in mind that the fundamentals, whatever's happening in the world right now, fear, uncertainty, and doubt, FOMO, news, fundamentals, is all baked into the price, right? So we don't need to read 20 reports and look at all the news because the psychology of buying and selling takes all of that into account on how the market is feeling. So now let's just go back into a daily chart. I've got the drawings on the daily chart now. It just breaks it down for us. And what I'm going to do is I'm just going to zoom into this part of the market. And the real part that's pretty clear is we've got these Fibonacci price zones. I've labeled this as a 3 or a C. Now, it's more likely to be a wave C because wave 3s tend to be much more impulsive. So this is not common of a wave 3. This is pretty common for a wave C, which means we're probably going to get a big pullback to the downside. So again, just to recap, because we want to look at this, we got a 5-wave move to the upside. Let's just make this crystal clear so you can see it. Right, it looks pretty clear, like a 5-wave move. It abides by all the rules and guidelines of Elliott wave, which is great. We got some Fibonacci key ratios. I'm not going to go into the details of how I got to these ratios, but these are typical price targets. And what typically happens in the markets, if one price target is exceeded, it will then typically go to the next. So we do want to be aware of the next resistance zone, which is between the price of $1.65 to $1.76 thereabouts. But we may have topped out mainly because I'm looking at that sell signal and this bearish reversal, right? This daily bearish reversal. And it tells us, right, if we get a move to the downside, so this is how I want you to think about this, right? Just logically, how the markets tend to move, buying and selling psychology. Markets tend to move in 5s and 3s. And when you got a nice, clean, relatively clean 5-wave structure, it's pretty clean on the upside. What you want to know is the minimum move to the downside will typically be, as a minimum, bigger than the former corrections. So we've got a correction here, and we got a correction here. And what we can do is we can measure the time and price of these corrections and say, look, Matic is likely to do a bigger move to the downside than these two, right? So something like this as a minimum. But there's a caveat. Because the weekly momentum has been overbought for quite a while, we're due possibly for a bigger degree correction. And that's what I want to finish today's video on. And what I mean by that is markets have different types of corrections. This actually will be cleaner if I just go on the weekly chart. If we go on the weekly chart, this ABC, right? This ABC over here, what looks like to be an ABC. Now, if this ends up also being, I'm going to draw it like this. I normally write 10A, 2OB, 3OC because we want to be aware of what the market is doing, but not have cognitive dissonance. In other words, only seeing what you want to see. But in this case, it looks like it's going to end up being some type of A, B, C. And you go, well, what does this mean? What does this mean? Well, wave A's can actually be a 3-wave structure or a 5-wave structure. I know it's a bit of detail, but it's just important when we get a perspective of what the market could be doing. Because if Bitcoin does end up going back down to $15,000, which is a possibility, not a guarantee, but a possibility, then Matic may end up exceeding this low, right? How likely is it? Look, it's not a reflection on the project itself because it's short-term market psychology, fear and greed, fear, uncertainty, and doubt. And just markets tend to move in cycles and trends. All markets, not just the crypto markets. So when we're looking at this, one of the possibilities that I'm looking at is that this might end up being a wave. I'm going to draw it like this. Stick with me on this. This will make sense. This ABC might end up being a wave A. This ABC might end up being a wave B. And then we might get another impulsive move to the downside. I'm just going to change the degree of wave count. So I'm going to make this a primary wave count. It's like a larger degree, because when there's buying and selling psychology, there's like psychology within the psychology. And we want to know what is the macro trend, the intermediate trend, and what is the minor trend as well. So I'm just going to also just change the color of this just so it stands out. Let's just make it amber. That would just make it a bit clearer to see. Right? So this is important. So we got this big move down, and it's broken down what looks like to be an ABC structure. We've got this big move up, and it looks like it's broken down to an ABC structure. Drawing's a bit off there, right? Now this is where we are right now. So we don't know what's going to happen next. But if you're making a decision today to short the market, lock in profits, or stand aside, you have to make a business decision today. So we look at the information that's available. And one of the key pieces of information is this weekly momentum tells us, like this one over here, tells us we are due for a top of some type of correction. So the way I like to look at the markets, let me just clean this up over here, is this part. We're really going to have, and we don't know what it's going to be. So we're probably going to see over the coming weeks and months that the momentum is going to move like this, and it's going to go into the oversold zone. And it might take a number of weeks, right? So I'm going to make this really clear. I'm just going to draw it out for you, right? So it's going to be something like this, right? A number of weeks. It will get into this phase, yep. Now, what the price does during this time, these number of weeks that are going to pass, because we can't pause time, time's going to pass, will tell us what the market is likely doing, and we can then reevaluate. So what you want to know is that the minimum that the market is likely to do, the absolute minimum, if I can draw this here, is a three-wave correction. All right, so we've got this 5-wave move up, 1, 2, 3, 4, 5, and the minimum is a 3-wave move to the downside. However, if this ends up being a wave B, then a typical wave C will exceed the former low, which is what this line is over here. So then this may continue to be an impulsive wave 3, 4, and then 5. And then we might end up in that 30 cents. It's not going to go below 0, but we'll never say never, but that's incredibly unlikely, obviously, for obvious reasons. But we may see it retest, or even just retest this zone over here, the 30-cent mark. And we want to be aware of that scenario. Now, again, I'm just breaking this down because sometimes I know I go too fast into technical details, and you may not have taken my training on this. We're due for a weekly momentum top. We've got a 5-wave pattern, and we saw on the daily chart, if I just bring that back up, we've got a sell signal, and we're at or near these key Fibonacci price zones. So now we've got double time frame momentum, weekly and the daily, right? That's 2 time frames. That's more significant than just 1 time frame. We've got pattern. It looks like a wave 5 of a wave C. I said 3 or C, but because of the shallowness of this move, it's not an impulsive move. It technically is impulsive in the sense of, let me tell you what I mean. As in, technically is impulsive, as in this low does not overlap into this high. So that's technically impulsive. But look how shallow this move is. It's not at that angle. It's more like this angle, right? So there's nothing too crazy about that. When the wave 5 is more impulsive than, in terms of is more vertical than what looks like to be a wave 3, that's normally a sign of panic buying, like a last minute surge of I don't want to miss out, fear of missing out, and people just panic buy. So sometimes it just overshoots, and then we want to be aware of that. So what we want to really be looking at, and I'm going to finish on this, if I just go into a hourly chart, so I want to bring some pattern reversal signals to your attention, right? So we've got this nice move to the upside, right? So when we're looking at this, it's a pretty nice move to the upside, right? Higher highs and higher lows, right? We can see these, right? That's where the market is. So we've got a low here, we got a low here, we got a low here, right? So this is really the last significant low. So one of the key reversals in terms of the price, the market will tell us how it's feeling. Because we might get one more high, because even just looking at this potentially looks like an ABC, and normally you'll see the price go up to make one more high. So it might reach that next price zone. So one of the safest ways if you're shorting the market is to actually wait for the low to be exceeded, and then wait for the first reaction, the first pullback. And we saw something similar with Bitcoin, right? If we just look at Bitcoin on an hourly chart, if I just go to Bitcoin on an hourly chart, we saw this. If I just get rid of all these drawings, we just look at the pure price action, right? Similar to what we're looking at is we had this nice impulsive move to the upside with Bitcoin. Looks like a 5-wave sequence. This is on an hourly chart, right? A 5-wave move, right? So this was a low. This was a low. So the first confirmation of that this high is likely to hold is if the price goes below this low. And we saw that happen over here. And here's the first reaction. And it's a potential ABC correction. Now, it hasn't been confirmed yet. But now we can look for a shorting opportunity on Bitcoin, either below this kind of wide bar, this swing low, or even this swing low over here. And then we can do something similar with Polygon Matic. I'm going to look at this and go, okay, if you got a stop loss in play, I wouldn't have it any further than this point. If we end up making another high above this point, then I would move the stop loss to over here and then trail it, because this does look like a A, B, C. And when you see a typical ABC, typically the market does end up making one more high to the upside. So there you have it. So do check out the trend identifier. This will give you powerful signals. I'm going to be updating some extra training on this, on how to set up the alerts with the signals. So on the daily chart, you will never miss a reversal. And then you know when you should be looking at the charts. You don't have to check it 50 times a day. And also the free Bitcoin report, I'll be probably in the next few days. I'm just waiting for the next move. If Bitcoin does have a follow through to the downside, I'll be then updating this report to see that we've got some type of confirmation. And then that will impact the entire crypto market, because that might be a high that lasts for a number of weeks. We're talking about mid to the end of March, maybe even going into April if we do get that sell-off. Look, we never know exactly what's going to happen because we don't control the markets, but we can see what is the high probability of what's likely to happen based on the technicals with the confluence of events. So let's finish on a nice quote from my book. We're going to go with chapter 5 today. It's Leonardo da Vinci. Simplicity is the ultimate sophistication. I was talking to my insurance broker the other day, life insurance and health insurance, business insurance, all that jazz. And he was talking about the markets. And what I noticed with him was he was going into all the fundamentals, right? The war in the world, COVID, post-COVID, pre-COVID, businesses and CPI and, inflation, and all of that comes into play. But it's sometimes very difficult to keep on top of, especially if you're looking at project by project and then you're looking at their roadmap, the teams and everything else. There's a lot of fundamentals and it can be hours, if not days or weeks worth of data, and it's always changing and there's new news, there's a lot of noise going on. What I learned 15 years ago when I first started trading and why I really got into technical trading rather than fundamental trading, and I do pay attention to some of the fundamentals, but really lean 99% on the technicals, is that the news, the roadmaps, everything, how the market is feeling is already baked in to the price action. So when you can see what we saw today, 5s and 3s, price ratios, momentum on double time frames, all of a sudden it's like you've got all of the news that the world can provide told in the price, the pattern sequences. So when Leonardo da Vinci says simplicity is the ultimate sophistication, by being able to narrow things down to 3 to 4 pieces of information, momentum, pattern, price, and time, all of a sudden you have a simple methodology that's more sophisticated than any amount of fundamental information that the world can give you. And also keep in mind with fundamentals, two people that are highly credible are saying the opposite things. It's like, who do you go by? So you want to have a methodology that you can go by, that you can watch the markets, learn the markets, and then effectively trade the markets.